we go. All right. Hello, everyone, and welcome to this AMA Ask Me Anything session at SHAPERZ 2021. I'm Hannah Richardson, Head of Enterprise at Finnovasia, and I'm delighted to be joined today by our speaker, Saemin Ahn, Managing Partner at Rakuten Ventures. Saemin, huge welcome to you, and thank you so much for being here today.
Really happy to be here. Again, really ask me anything, and I will try not to swear because this is live broadcasted, but obviously, if you have humor, that's a good suit for ask me anything session, right?
Absolutely. So no topic off limits for Saemin. Some of our audience may have just watched your session earlier, which was on our investment trends and opportunities for SMEs and startups. So there may be some follow-up questions from that. To any of our audience who missed that session, you can catch it on demand after SHAPERZ concludes, so no worries there. So please do send in your questions via our chat box and we will get into it. While we give everyone a minute to start sending in questions, let's kick off with something super easy. Saemin, can you tell us a little bit about yourself and Rakuten Ventures and what you guys do?
Sure. Hi, guys. My name is Saemin again. I founded and I've run Rakuten Ventures. We're a $285 million AUM investment platform born out of the Rakuten Group. And for the past 8 years, now running 9. Feels like I've been running this for 100 years, but so does every other VC running their own fund. We've invested very globally. More than half of our portfolios are in the U.S. and also, half our portfolios are in Southeast Asia. We have really no sacred cow in terms of what we can or cannot invest in. We've invested in everything from an AI ML DevOps company to a Wonder Bread company in Japan, humorously trying to show you the spectrum of our investments. We do investments anywhere from about $1 million to $10 million US dollars, and really. I think one of the most important parts of understanding and empathizing with a company is what kind of fit he or she has with the investor and founder. And because of that, we really regard the interaction with that perspective very, very important.
Fantastic. So you just mentioned there that you are across a whole range of industries, really wide, different ventures. How do you keep up to date with the market and the trends? Do you have any tips and recommendations for people? That's coming from Laura.
Sure. Don't sleep. And just so I want to put that with humor and a bit of truth is that I read really like crazily every single for the whole day. As the markets have closed in the U.S., that's about when I wake up, which is about 7 to 8 a.m. I will go through everything that's happened in the U.S. plus what's happened half the day over in Europe and London specifically. And then I'll read throughout the day in terms of what's happening on the technology, finance, and overall general kind of market side. And basically, I've been doing that whole process nonstop for the past 7 years. It allows me to basically compress a large amount of information and context. And because of that, when I talk about stuff, I try to talk in good context, which I eventually end up doing.
And so if you had to give a sort of a top 3, let's say, sources of information for people looking to do this reading, to keep on top of these trends, where are you looking? Where are people reading?
I think if you were to ask me, give me one platform, it will be Twitter. Specifically just because there's so many things going on and people are very much happy to contribute to the platform. Things that are very, very low latency, high contextuality. For example, if you're in the cryptocurrency industry, you looking at a news site only is actually doing yourself harm because there's so many things happening every single second and minute that it's much better for you to look at some of the thought leaders or some of the leaders in those markets to see what they're doing and also what the publications themselves are curating and sharing on the platform of Twitter. So I think Twitter would be a very good kind of do-it-all platform for you to aggregate and consume information.
Fantastic, cool. All right, we've got lots of questions coming in, so I'm going to go to the next one from Edith. Saemin, big fan here. What are your thoughts on impact investing, and where does Rakuten Ventures stand in this area?
Sure. Impact, I think right now, impact investing has, at least on the public side, shifted very specifically towards ESG and good governance and also green investing. But for us, impact investing also means doing things that are meaningful in the health industry, in the biotech industry. For example, where we invested like $100 million into a company called Aspirin Therapeutics, where we later actually took majority share of the company to do near-field infrared immunotherapy for head and neck cancer. It was really, really important. And some of the studies that are coming out with that company it's amazing the amount of actual kind of results they're giving in terms of cancer, immunospectrum efficacies. So definitely we are big on impact investing, but more to a wider spectrum of things.
Fantastic, cool. All right, so maybe following on from that, from Charles, which markets have experienced high CVC activity lately, and what are some of the reasons behind that?
That's a really good question. In terms of CVCs, the moniker corporate venture capital has also changed drastically. So if you were to look at just CVC in general, the biggest aggregate investor, it definitely has been a player like SoftBank Vision Fund. They've deployed, like just in about 1 month, maybe $2 to $3 billion across, global kind of geographies such as South Asia, India, in the US, and also they've taken large public equity stakes in biotech companies. If you were to look at what are the other bigger players that have actually been very aggressive consistently, I think you can never discount the activities at Tencent, which is of course located in Hong Kong, have been doing consistently in gaming and also deep tech technologies. But in general, you would see, like, for example, semiconductor industry platforms building out CVCs to actually invest in the next generation of fabless technologies and whatnot. You would see guys like Cisco and guys like Arista doing their own investments in terms of understanding what the root technologies are. But I think there needs to be a big delineation, because when you look at a guy like SoftBank and us specifically, we're doing this for financial return. But if you were to look at other CVCs such as Rakuten Ventures, Intel Capital, which are less active these days, they're doing it specifically for the synergistic drive and the financial benefits secondary.
Right, gotcha. Okay. Maybe this is a nice question to go to next then. So how does CVC measure up to sort of the greater VC ecosystem then?
Gotcha. Again, I guess this is ironically, if you were to compare guys like SoftBank and Tencent, and maybe to some other players such as SAP Ventures and maybe us, for example, we blow 90%. We blow 90% of these of the commercial VCs out of the water, specifically because. Not because we're like the smartest people in the room. We like to think that we get good grades and whatnot. But one of the bigger aspects of why a lot of CVCs that are well known perform well is because we're actually able to deploy capital without duress or pressure. Commercial VC firms need to deploy capital in a specific time span and cadence. So if you run a $100 million fund and you're Fund X as a commercial VC firm, if you don't deploy 70% of that in year 6 out of 10, you are in deep trouble, because you need to return 30 to 20% IRR on the $100 million. So doing that, you'll see, like, it doesn't really happen anymore because I think LP and GP relationships have matured more. But historically, if you saw like some commercial VC firms investing a bunch of money into some of these companies that you don't understand clearly why, and despite the fact that you have good context in the industry, it's a lot of times because they need to deploy that capital before their fund life ends. So for us, there's no cost. For commercial VC firms, patience is the most expensive thing in the world to actually handle. It's like trying to hold lava in your hands. So I don't know why I just said that. Anyway, sorry. But definitely for us, because of our patience factor, there's no cost in that. We're able to deploy only when we think it's the most opportune, and that because of that, a lot of the CVCs have just really amazing track records.
Right. So everyone's looking for great companies, but coming at it from very different angles. They're on a bit of a time pressure. You've got a little bit more luxury of taking your time. That's interesting. Okay, cool. Let's go to Anna's question next. So how does Rakuten Ventures embrace innovation, and what are some of the key takeaways for you since the pandemic started? So kind of a two-parter there.
Gotcha. We invest. Wow, I just went Borat. Okay, sorry. I don't know why I did that. I think we embrace innovation by trying to have an open mind. And when I say open mind, not only looking at simple like hard tech, deep tech investments or SaaS investments, but as I mentioned before, we invested in a Wonder Bread company specifically because we saw the contextualness of the Japanese market and how people wanted to interact and consume with brands and products. And for us, being able to be open-minded towards an investment and looking at the vertical and how it's enriched by technology, and then empathizing what share price we will pay for that. I think that has been a very hard process that we keep on having to learn over and over again, because we take a bet on these companies and they end up being parabolic, and we're very happy about it. And when we learn back from it, we're like, wow, we were really lucky. Is the actual is the actual lesson. Like, we were really lucky with this stuff. But and what I'm trying to say is that that sort of open-minded and innovation, that innovation-driven mindset, I don't even like how I said that, but mindset towards trying to find something that's very different and innovative, it's an atrophy trait. If you don't keep on doing it, you end up learning how to do it. It's a muscle memory that you just forget about. So that's, I think for us, how we keep that open mind is to consistently practice what we preach.
Right. And any takeaways from the pandemic for you in terms of the innovation you're seeing?
Yeah, at first I internally scream, but other than that, I think one of the most important things about the pandemic is that it's compressed so much of the actual consumption habits that were supposed to happen in the course of 12 years. It's happened in 10 months, 9 months. It's been insane, especially for developed markets. And because of that, you have an understanding where you are forced as an investor to completely change all your biases in terms of how consumption is happening, whether on the enterprise side or the consumer side. And I think once that appreciation happens, then you're actually in a better position to actually deploy capital on the behalf of your LPs. Now, it gets a little bit more complicated because that appreciation also, it becomes hyper fragmented, country to geography to actual kind of developmental stage of that country. So if you were to look at a country like Singapore or even Hong Kong, one of the most important parts to look at this is that Singapore and Hong Kong are much more back to normal than a country like maybe Korea could, because Korea has like 500 to 600 cases a day, so they're much more shy about going outside and consuming offline. So those appreciations become more than comparable in terms of complexity for that calculus you have to actually take into account. But again, that's the excitement in doing venture capital, I guess.
Right. So things that would, differentiate us anyway, like different markets, suddenly become even more different and separated from each other.
Oh my goodness. I mean, yeah. I mean, I talked to one of my friends at DoorDash. He's like the director of engineering and routing technology. They're getting no sleep because a DoorDash launching in San Francisco compared to a state where it has much less saturation of viruses and high saturation of vaccines, they can deploy normally, whereas a place where it's very, very stricken with the virus, they have to completely change the routing mechanisms and how they actually recommend algorithms.
Yeah, absolutely. I mean, it's been a crazy year for everyone, but it's really interesting to get these different insights from different industries on how it's affecting people. So, all right, let's go to this question from Alan. How do you manage the huge number of pitches that you receive on a daily basis? And what can startups do? How can they best engage with you to stand out?
Sure. I have never been able to manage it because I just get so many pitches every single day, every single weekend and whatnot. The best way to engage with me is simply find industries that I am looking at right now, and I've been very public about that when I'm on Twitter. So I think we're in a market where founders are really spoiled for choice in trying to find the right investor for themselves. So I think number one, before a founder thinks about engaging with a VC, I think they should do a lot more research or get some data on what specific VCs have been investing in for the past maybe 1 or 2 years, and basically looking at the 4 to 8 business cycles of what they've invested in. I think that would give a very good roadmap towards who they should contact. I think if you were to look at it back like 10, 15 years, 20 years before, way before my time, there were so few VCs that indeed you can do a shotgun and just talk to them all and it would make sense. But I think the verticalization of the VC industry is as such where you really need to do your homework to find out who the right VC is for you.
Right. And on the flip side of that, is it obvious to you if a company has just shot you an email without really looking at who you are and what you guys do? Like, can you tell if they haven't done that homework?
Oh yeah, 100%. They sound like a Nigerian prince. 100%. It's like
right.
like, yeah, it's very obvious that they haven't looked at what we're looking at, or it just seems like it's like just word salad. Just, oh, like the next generation neural network technologies and whatnot. Much more easier just to connect and try to find out what I've been looking at. And I would say that I'm a little bit of a different case where I will actively search for the companies that I want to invest in and connect with.
Right, right. Cool. Okay, let's go to another question from the floor then. Okay, here's a good one from Harriet. Personally, which company that Rakuten has invested in is your favorite and why?
Yeah, that's like telling your mom, asking your mom who you love. Do you love Hannah more or do you love the sister more, right? So I think that's, for me, I would say that I really am in love with all the companies that I've invested in for different reasons. And I think that's the stance that I think every single venture capitalist should take. And for some companies, I'll engage much more with them. For other companies, because they know what they're exactly doing, I will engage with less with them. But definitely in each of these companies, if I were to think on the top of my head, what are some really interesting companies that have built out really cool businesses? I'd say a company like Carousel is a very obvious example where they built this sprawling C2C empire in Hong Kong, in Southeast Asia. They've been able to really court players like Naver and Line and Telenor into their cap tables and really build out a fungible and gigantic business. I think Gojek, which we were early investors in, we've also been fortunate to understand how they've actually scaled and gotten inspiration from Chinese players such as Meituan. So I think those 2 or 3 companies I've seen and been very affected by. I've learned much from the founders' ability to manage, and also the other investors on those cap tables. Very, very knowledgeable. Really, for me, each of those people are mentors in their own right to myself.
Gotcha, gotcha. So you mentioned that these are all companies that you're interested in, that you're passionate about. You also mentioned earlier that you don't sleep at all. How do you balance engaging with all these companies and sitting on, the advisory boards and things like that? How do you balance it all out?
I don't. I mean, you just brought up a good word, balance. But when I say this humorously, but actually without humor, when work equals life, you have balance, right? It's not work-life balance. It's when work equals life. Mm-hmm. And I take that to heart. Is that I simply love what I'm doing, so I don't consider it work or something that's very frictionful, right? I run to get to my job because I like it. And that's how I empathize the amount of work that I do tirelessly with and for the founders and future founders. And that's been the case for the past 8 years.
Excellent. Okay, cool. All right, we've got a question from Al. Al says, how about carbon footprint companies and energy conservation companies which require high expenditure investment? And do you also invest in autonomous companies and AI new startup ventures? There's quite a lot going on in that question.
Sure. There are several carbon footprint companies that have gotten funding as of late. We haven't looked at specific companies for now. If you look at some of those companies, they're still very early into their development and scale process. And Al is completely correct that it does take a lot of sunk cost. That being said, Rakuten Venture has never shied away from investing in high sunk cost businesses. And the secondary question was autonomous companies. Maybe you're talking about autonomous vehicle companies. If you were to look at the market right now, there aren't a lot of autonomous vehicles in the earlier stages of the market. There's Argos to WeTaxi to even Didi has their own autonomous unit. Uber just recently sold off their autonomous unit to Aurora. So there's a lot of companies mid-maturity and highly capitalized. So those are companies that I would be looking at, but maybe to invest in the public equity spaces of things. And I think they have already left the stratosphere of early to mid-stage companies. New AI startup companies, definitely I'm looking at, I think I mentioned in my talk, is I'm looking at photonic computing to be able to actually compress the actual compute weight that has been put on these server farms. I've been also looking at trying to build out and find what does like a McAfee, antivirus McAfee for AI ML look like? And definitely I'm trying to look for that also.
Wow, okay, nice. All right, let's look at a question from Sam then. What is the most difficult challenge for VCs that has surprised you the most in the past year?
I think in the end, the most difficult challenge consistently and durably for VCs will be the human aspect of things. In terms of understanding and working and empathizing with the founders, really understanding that if, for example, the company is having a really bad down year or a down quarter, you could really feel bad about it as an investor, but you will never feel the weight or the actual opportunity cost that the founder feels. And I think that empathy, when you lose the side of that empathy, you lose an important part of being a good investor. So I think that has been a surprising prospectus on investing in companies. I've had situations where, the most situations that affected me is not that the company does bad or the company is in a hard time. I think it's been when, for example, the founder gives up and it feels like you've also failed as some sort of a proxy parent that, oh my goodness, maybe I've invested in a company that doesn't have the right legs to give the right returns to my LP. So I think that personal aspect, the empathetic aspect, continues to be the challenge that I try to get over every single day.
Right. So that connection with that founder is really key for you for the success of the partnership, right?
Yes, ma'am. Yeah.
Gotcha. Okay. Let's see. All right. So Edith is asking, what is the secret ingredient that catches your attention as an investor?
I think it's not secret. I think it's really obvious in terms of catching my attention is specifically when startups, the technology-focused ones, centric ones, they have a very specific and narrow viewpoint on utility. They have a very clear vision of where they want to go. A company can have multiple, focuses and product lines that they can build out and possibly make successful. But I've seen more than not that the other side of the table, where there's just one company that's trying to build that specific utility set, has been successful. And for me, I pattern match towards the latter. I like companies that are much more focused on what they're doing, has a very clear value proposition, and is taking what's happening contextually in their target markets and has baked that very naturally into their products and services and technologies.
Gotcha. Okay, cool. Let's circle back a little bit. We had a follow-up question. So we talked about some of the categories that you've seen receiving a lot of attention from CVCs. Are there any areas that haven't received so much attention that you think may go on to become a hot trend?
Yeah, I mean, the aspect of what I just mentioned about advanced computing is one thing that's really, really important, especially when we talk about chip shortages, especially when you talk about investment into new materials for semiconductors like graphene technologies and whatnot. I think these will become very important aspects to any investor in the future. To take a step back, when you look at what will be focus and importance for venture capital, I think if you were to pull the timeline a little bit more, I think even the aspect of what a venture capital is 5 years later becomes so different. So if I were to just pull that timeline into very narrow 4 to 5 years, definitely photonic computing, quantum computing, things in relation to being able to do the same compute strategy but at much shorter time frame and energy usage will be very important for all the people in the industry.
Gotcha. And Harriet's asking, what is the future plan for Rakuten Ventures? Is there any area that you would like to focus more on?
I think for me, we just, because we have a very general mandate in terms of how we invest, we invest in all technology to D2C. I think the future plans of Rakuten might be is that we might look at different financial facilities. So we might look at investing in public equity companies a little bit more. We might look at investing into even SPACs or other financial levers a little bit more to further kind of harden and solidify the stability of our assets. I think that might be one direction we might take in. And actually that dovetails backwards into what I just said. What does a VC look like 5 to 10 years later? Well, if you're going to say that you're going to still be investing in the same asset class and doing one thing, I do believe that's as a VC slightly irresponsible. I think VCs will have to definitely mature and evolve very, very quickly.
Right. And so like investing across so many different industries, different classes, does that give you a sense of freedom? Like there's so much out there for you to explore, or is it almost paralyzing. There's so much out there for you to explore.
I think for me, it's an immense sense of freedom and alpha in many ways. But again, that's because I'm a specific kind of investor, and I'm not the other kind of investor. I'm not sure what the other kind is. I think definitely all VCs, venture capital investors, or growth equity investors on the private and the public side, they simply need to find what they're comfortable with and how they want to interact with the ecosystem. So for some VCs and GPs, indeed being stricken to a specific vertical is very comforting for them, and that enables them to build out a business. For me, I just haven't interacted that.
Right. Cool. Okay. So Michele is asking, what remarkable examples of business models have you seen in AI-related companies?
AI-related companies. I think, well, let me take a different spin on this. I actually haven't seen an AI-related company have a specific business model, but I have seen where AI has completely changed the consumption habits of individuals. So I think you know an innocuous app called TikTok. I'm sure you have 40,000 followers on that, Hannah. But yeah, come on, what $100,000, 100,000 after this call, right? So, but what I would say is that TikTok is literally an AI recommendation platform. The reason why you doom scroll is not because specifically you like to doom scroll. It's because of dark patterns and their ability to give you and feed you the right consumable content. I would parlay that into, for example, Clubhouse. Clubhouse had a parabolic rise in terms of how popular it was, but a lot of the criticism right now that Clubhouse is actually receiving is specifically because they have not found the right recommendation algorithm and format to deploy it onto their user base. So when you ask me what's a revolutionary business model, well, when you're inadvertently and indefinitely doom scroll on TikTok, you're able to generate an abnormal amount of relevant ad impressions. And I think that has been indeed AI's ability. Think about this. Think about AI, how dumb AI is right now in 2021, yet it's able to keep our engagement for an abnormal amount of time. Well, until you have like your mom or your wife hits you at the back of your head, right? With a spoon, whatever. But anyway, that's I think in many ways a revolutionary trend, where we're able to take very disparate, segmented forms of information, feed it into a machine, and the output becomes higher engagement. I think that's really, really something that a lot of people have missed in 2020 and 2021.
I absolutely couldn't agree more. It's creepy how much my phone and my computer know exactly what I want to look at on the internet. So yeah, the AI is insane there. All right, we got a question here from Andrea. Would you rather invest in purpose-driven startups or tech startups?
I think in 2021, a lot of that segregation is becoming in many ways meaningless. If you find a passionate founder, they will be purpose driven, whether it's for ESG, carbon footprint, or make the better world kumbaya reasons, or for specific reasons in terms of being able to give higher utility, higher happiness for their user base. I think the startup ecosystem has matured to a point where we have that very comfortable Venn diagram of people who have passion and that want to actually build a tech-driven company and a startup. I think a weird and maybe bizarre example of that might be like a company like Palantir. If you've seen Palantir's like videos about how they're like fighting against the tyranny of the world, this is the CEO talking, and he's talking like he's like the opposite of a superhero or a comic book villain, right? But he is purpose driven. He really believes that with Palantir, he will be able to defend the rights and the beliefs of the American political and financial system. So I think you already find these people, and definitely you'll see more of them pop up in the future.
Gotcha. All right, Saemin, we've got under a minute left. So let's end on a slightly different note. You've already told us how passionate you are about your job and what you do, but if you weren't in CVC, what would you be doing?
A con man? I don't know. I mean, again, just I think one thing that I'll be doing is I'd still love to be doing business. I still love to try to work with companies and platforms, and I would not stop on that. But I think definitely what I am bad at doing is probably, trying to teach people something. I like to learn from people, and I think any interaction that allows me to do that will probably have been kind of my career. But one thing that I've learned in the past 8 years is I really want to live and die in investment. I think that's the flower to me, and I believe that that's where I'm going to just stay for a good long period of time, until they kick me out of the theater, of course. But that's where I'm hoping to stay.
Fantastic. Investment till you die. I love that commitment. Saemin, I want to say a huge thank you to you for being here today, for sharing your insights, for answering all of our questions. And I want to say a huge thank you to our audience as well for sending in all of your questions. And I hope everyone has a wonderful rest of the day at SHAPERZ. Thank you all so much.
Thank you, guys.
Thank you. Bye-bye.
Bye-bye.